Good morning, good afternoon, good evening. Welcome to the Singapore FinTech Festival. We're looking forward to another exciting panel with Oliver from Alpha FinTech. My name is Umair Hamid from Microsoft, and we'll be discussing today the future of neobanking, traditional banks, and really the evolution of technology that will enable these digital banks to come to market and offer their products and services to customers. So Oliver, maybe a quick introduction from you before we get started.
Oliver Wright, CEO, Alpha FinTech.
Excellent. Oliver, do you also want to maybe talk a little bit about Alpha FinTech before we get started?
It's actually relevant for neobanks in the sense of that we're building rails to build a merchant acquiring and payments business on top of. The whole topic of neobanks isn't just about what it can do for customers, but how can you build that infrastructure? The rise of the neobanks has come because access to technologies is cheaper. And rather than what the old model and the legacy model was of spending gajillions and building platforms, what the neobanks have done rightly is focused on building product. And the best way to build product is to utilize solution providers such as Alpha FinTech that are focused on a niche solution aspect within the solution lifecycle, so that they, the neobank, can then just move forward and focus on customer acquisition and on the main user interface that they want. So Alpha's role within that ecosystem is essentially for any neobank, for any solution provider that wants to provide merchant services the same way Adyen and Stripe does, now there's a turnkey infrastructure available to them by a click of a button.
Excellent. So I was just reflecting on some of the work we've done previously with digital banks here in the region. And I was quite intrigued to know, do you still think that these neobanks will have that wow factor as more of them come to market? Because what COVID has done to the incumbent institutions, right? So in the absence of COVID, the traditional banks were kind of progressing at a certain pace, and these digital banks or neo-digital banks were going to have a big wow factor. But because of COVID, a lot of these traditional banks have had to accelerate their own digital transformation and, kind of ensure that they're able to still attract, retain, grow their customers. So my own view is that the delta between the wow factor of traditional banks and neo-digital banks has shrunk. But would be keen to get your thoughts, Oliver.
I would actually disagree with that opinion strongly. The reason why I would disagree with that is the concept of digital isn't just about making something fancy digital. I think it was RBS who recently closed their digital bank, as did some others. The incumbents, the large banks, are still going to be burdened with legacy thought process and thinking. So it doesn't matter how cool and fancy your platform is, if you can't onboard a customer within minutes and others do, then right away you're not digital. The concept of digital, first and foremost, is speed and simplicity. And if you don't have both, then what do you have? The second argument I'm going to make, particularly, let's say in Singapore, go into the App Store and look at the ratings of the digital apps of these Singaporean banks. What unfortunately you see the majority of the time, they're ranked very low. Speed and simplicity. So what the incumbents have an advantage of is this hunger and understanding of speed and simplicity. They have built solutions because there was something frustrating to them. Less about a fancy and glitzy interface, but more about how do I make it accessible to anybody and how can I evolve with the customer requirements. So due to that, there's a different advantage that the mindset of what these young companies come in with is going to provide an advantage over these legacy thinking that still want to fit the legacy thinking into a platform approach that does not cater to legacy thinking.
Interesting. So if we go by what was saying, speed and simplicity, who's actually going to want to bank with these digital banks? Because if I look at a lot of the surveys done in different markets, the surveys are saying that not many people would want to have the digital bank as their primary bank. They may want to have a second bank account with the digital bank, or they will kind of test the waters. In fact, I'd go as far as to say that, look, digital banks will attract, the curious and inquisitive or the frustrated, But often these people are not the ones that are well banked. They are actually at the lower end of the spectrum where they are perhaps part of the underbanked or not so well banked. So is that going to be the segment that these digital banks are going to go after and attract, keeping in mind that this is certainly not the most profitable part of the segment?
Perhaps we should rethink the definition of a digital bank, though. So let me give you an example. Are you thinking of Square as a digital bank? What about Shopify? What about Stripe and Adyen? However, all of them are giving out loans to corporate customers to help them grow business. And all of their customers are very happy about that because of the speed and simplicity, and hence are becoming primary drivers for that. So the concept of a digital bank has got the stereotype that some, Gen Xer or millennial in jeans and a t-shirt is now sitting in the back of the room next to somebody who's launching a Bitcoin, new Bitcoin statement and is now saying, hey, please drop your money with me. That's not necessarily the case. So digital banking is now rising from every corner. The whole topic of embedded finance is now popping up, where other technology companies are leveraging easier access to banking licenses and banking type services to create new financial services. And with that, the more comfort comes from that angles, the more you're going to see less one digital bank a la JP Morgan and the HSBCs of this world that just dominates everything, but thousands of small niche providers that are servicing a certain solution element that the main banks cannot. Now that will also pop up in the SME space, but not because these SMEs or micro merchants or farmers are having easier access to a bank account, but it'll come layered with an additional value add layer that the main banks are not providing. So in summary, what I'm saying is, let's not think of a digital bank the way I'm thinking of a big bank. The digital banks that are going to succeed is because they are servicing a niche vertical and they have a certain advantage, like the Squares and Stripes, that understand the payment flow and the growth of that better than the bank can, and are leveraging the technology to, again, make it simpler and faster for them to get access to the necessary capital that the other banks simply cannot. I just make one point on customer acquisition.
Please.
How is that any different than majority of these other companies, the Grabs, the Ubers, the consumer companies who are spending gajillions in acquiring their consumer base? And generally, then they get funded Series A, B, C, D, where there's just a focus on top line revenue, and the money is basically burned in order to acquire as many of these users and consumers, so that ultimately you can spin it out to go public. So while we're not really used to that, maybe in the financial space, because banks are viewed on the bottom line, but there's no different than any of these other super apps that have been created that have just grown about the top line and customer acquisition.
Sure, but I think with banks, and I do want to pick on the point about success, right? So what is our definition of success for a digital bank? Is it the number of accounts they're able to acquire over a certain period of time, the deposits, the loans, the net interest margins, etc.? But ultimately, the challenge with banks digital banking is all of us could have a digital bank account, but if we're not going to use it or not going to transact on it, or we're not going to kind of deposit or take loans, then that account is there. Company is still incurring the cost to maintain that account, but they're not really seeing the revenue to justify that setup. So how do you see, Oliver, technology playing a critical part in letting that or allowing that to happen, right? So hyper personalization, risk management, yet profitability down the road.
So going back to the first point that you just made prior and tying it into what you just said, the point of money right now isn't to sit in a bank account. The point of it, why they're going to go into that digital wallet, is it becomes capital that they can leverage for something.
Sure.
And I'm not talking about maybe the farmer who can't even get a bank account. I'm talking about the more sophisticated customer that says, why should I bank with you? What value can you provide me there? And that's where technology now comes in. Let me give you an example of how that would work. So if I'm a merchant who's focused on growing my business, and now I have somebody who's processing my business for $200,000-$300,000. If I work with the local banks in Singapore, anybody else, and I want to get a loan to grow my capital and to grow my business, what happens? I have to do the new KYC AML process, and that's weeks. So while I'm running my daily business, I have to send paperwork, and it's distracting from my main business. Now I got a loan. Now I have to worry about the repayment of the loan, and now I've got a payments account. Two independent processes that are making it operationally easier for me, two completely different providers. Here's how the techies and the fintechs are solving that in a much more elegant fashion, where orchestration engines come to play, where data intelligence come to play, because all of those need to harmonize and work together versus being completely separate and independent solutions. So what the most successful fintechs are saying, hey, merchant, you're processing $200,000-$300,000 of volume with me. You are automatically approved for a $20,000-$30,000 loan, capital. And not just that, we're going to set up a rule where 3 to 5% of your processing volume is going to go to repay the principal of the loan. The more you grow your business, the higher your credit line. The lower your business, we'll have to figure out what to do. But what it does, it gives the user immediate access to capital, allows them to grow better. It's smart capital that also operationally makes it easier for them and the bank, that provides risk control for the bank as well, because they control the funding. And all of that was done because they understand the customer better, because they can orchestrate rules between loans and payment platforms. And it's a complete game changer how now you don't have money in the bank, but it is monetizing that money to grow your business and capital better. And the evolution that has now become, or has to happen, is instead of it being a bank, they're becoming service providers. The service is not, you've parked your money with me. The service is, here's how I can help you grow your money, because I have a technological foundation that'll provide you speed and simplicity to grow into other verticals.
Very interesting. So Oliver, if we kind of reflect on banks or these digital banks starting to become also more of a service provider, right? And helping you not just hold your money, but find smart ways to kind of help you with the cash flow, help you kind of generate more revenue, etc. Does that mean that as we look down the road, these banks will also essentially have to come up with super apps for financial services, right? So it's not just hold value, lend value, store value, but it's actually thinking beyond. And if that's the case, then what do we see that down the road? What is the future of the super app of banking?
And the key word again is value. Value is not, I can store my money. There's 1,000 places where I can store my money. What difference are you providing now? I can store my money because my UI is glitzier. Awesome. So the value has to come in this interconnectivity. Interconnectivity, what do I mean? It has to mean that all the surrounding services to run a business are enabled easier. If I need to send remittance and FX, I can do so quickly. If I want to issue corporate cards or prepaid cards to some of my buyers or suppliers, I can. If I want to get a loan, I can. And all of that, for the bank's perspective, provides them more data, more visibility, and more risk control. And from the user's perspective, simplicity to grow their business. So yes, Uber apps are the key. Trying to build them yourself is a waste of time, especially for banks. Good luck with that. They have nearly all failed. Lunacy is doing the same thing and expecting different results. I don't care how pretty you make it, how many buzzwords you get, how many phony awards you win behind them. History shows it does not work. So this is where you need to deploy technology that gives you the foundation to build these super apps by collaborating with them. So you have to shift your mindset from building platforms to building products, and the product future is super connected apps that provide the consumer more value to park your money with you and can grow the business that way.
Excellent. So let's take a moment to think about the underlying technology needed to enable what we think is the future of digital banks, right? So the super apps, the hyper personalization, the connectivity, the APIs, the seamless flow of data, the regulations, etc., right? How would you expect the technology to evolve, right? So one is the solution, the service, but you also need the underlying technology to kind of help you get there, right?
Access to technology has never been easier. This is where Azure has transformed the financial services industry. In 2010 and prior, everything was controlled by the legacy behemoths. From 2010 to 2020, with the rise of the API, VCs poured in gajillions to help the rise of the Stripes and the Adyen's, rightfully so. But now with the rise of the financial cloud, there's a new era coming where there's rails and infrastructure that provide easy access for new incumbents to build product, that you don't need a horde of hundreds of devs and people, that you don't need 100 million plus to build a platform. Via Azure, you have security, scalability, and stability. So any product provider that sits on there, you can already rest peaceful. Then on Azure, you have innovative products and solutions that will allow you to easily and quickly fuse together and customize the product. And hence, you can focus your niche on what the differentiating key elements are. So access to product and technology has never been easier and cheaper. And the era of the financial cloud is upon us that'll change how people develop and drive and build product.
So we've talked about personalization, we've talked about technology, how it's become very accessible, very cost effective, etc. So my own view is that down the road, we're going to have enough fintechs out there that when you put them together, you'll actually be able to set up a bank, right? So I actually don't need to build any technology if I think about it, right? So I have client onboarding solutions. In fact, even before that, I have analytic solutions to identify customers. Then I have onboarding solutions. Then I have, account management solutions. Then I have analytics to help me hyper-personalize product services, treasury, reporting. So then why do I need banks going ahead? What is stopping anyone with a strong brand, strong reputation, trust factor to just take all of these modular components of different fintechs and launch my own bank?
It'll take a while. It'll think about shopping carts and how they've evolved. In the early 2000s and 2010, everybody wanted to build their own website. And especially the big companies. And how am I going to run my e-com business on a platform that I don't know if it disappears? What happens to my website and webpage then? And look at it right now. The Shopifys and the Magentos of this world are completely dominating. Hardly anybody builds their own websites anymore. So the trust factor takes time. And you're seeing it also with the whole evolution of the blockchain, where how am I going to run my business on some weird stuff that I don't even understand, and look at how it's crashing and look at happen with the ICOs. But now slowly it's coming back and use cases are building and people are realizing it. And especially in the financial industry, change takes time. And it's not going to be as fast as we innovators want it to be, but it's not going to be as slow as the banks think it's going to be. But it's happening.
Excellent. I'm just conscious of time, so maybe we'll look to wrap it up and maybe get some final thoughts from Oliver, and then I'll sum it up for everyone. So Oliver, any final thoughts on the future of digital banks and banks?
The speed of change is going to be even faster over the next 5 years. You need the first product evangelists that unfortunately always leave a lot of victims on the side of the road that others learn from. But the access to technology has never been easier and cheaper, as well as provided a level of confidence due to solutions such as Azure, that people can rest much more peaceful on what they're running on and can develop these solutions that are tailored to what's needed today, that is no longer about just parking money, but making money work for you. And this is where these young, innovative companies are significantly better positioned to than a lot of the old companies that not just have legacy tech burden, but unfortunately also legacy mindsets.
Interesting. Excellent. I think in a nutshell for me, as I look ahead, I think one thing is for sure that the customer will be the one who will benefit. So both existing banking customers will see the service bar get raised, the hyper-personalization happen, but at the same time, a lot of these underbanked or poorly banked or not so well banked segments will hopefully get more access to the financial services ecosystem. And I think also regulators such as MAS are playing a very proactive role. They're very progressive in their thinking and really supporting the ecosystem. So I think ultimately it'll be a win-win for customers. Traditional banks will certainly be challenged as these fintechs, dent into their business. But hopefully they look to also further partner and accelerate their own digital transformation by better leveraging a lot of these fintech technologies that are out there. So pretty exciting, interesting times ahead. Thank you so much, Oliver, once again. And thank you to everyone who joined us for this panel. Hopefully you found our discussion interesting. And I'm sure lots of other sessions to come at the Singapore FinTech Festival. So have a great day and look forward to speaking soon.
Thank you. Bye.